Do you own stocks, or do you have mutual funds that own stocks? Do you have an IRA account, a 401k account? Do you plan to have one day to salt away some savings to build up your retirement? Do you know and understand what realized and unrealized gains are? Realized gains are when you sell a stock and realize the profits. And yes, you can be taxed on those as either short-term under 1 year or long-term gains. Do you know what it means if a tax was to be applied for unrealized gains? Meaning you get taxed before you actually sell a holding. You get taxed on what it has generated in maybe a year's time. Now you may think that that won't apply to an IRA, a Roth IRA, or a 401k. But if there's one thing that I've learned over 35 or 40 years of trading and investing, is that they can and will rewrite the rules. But regardless, if you are in the stock market, ask yourself, what impact might a wealth tax have on the overall market, on your holdings in those retirement accounts, Roth IRAs, 401ks? What might it do to the employment picture? Take a listen.
Especially in the tech sector, you have people sitting on large, long-standing embedded capital gains. And so for people to understand what this means, it means you have to pay taxes on sales that you have not yet made. And even forget the stock market and think about even everyday Americans across this country. That means that if you're a farmer or if you're a small business owner, you will owe taxes with cash you literally do not have in your pocket to pay those taxes. That is a formula for a second Great Depression. And it is something that's been in the bloodstream of Democratic policy for a long time. Go back to Elizabeth Warren and Bernie Sanders' plans of a wealth tax, even in the 2020 primary. I think this idea is here to stay for the Democrats. That's a big one. I think Tim Walz's selection as vice president says a lot. That's the first real presidential-style decision we've seen Kamala Harris have to make. She went with somebody who at the state level has favored increasing taxes on capital gains. In that case, it was unrealized, but they have talked about unrealized gains and taxing them. And I do worry about that, what that means, not just for the stock market, but for everyday Americans across the country.
The stock market, if there's not 60 votes for that in the Senate, the stock market doesn't have to price it.
Yes, 60 votes, or if you agree.
I mean,
well,
right.
I respectfully disagree with one aspect of that, because Kamala Harris has been the chief proponent of ending the filibuster to ram through her policy objectives.
Yeah.
And so if she's the president of the United States, and in my view, God forbid, a Democratic Senate to aid her, that could be 51 votes. And could you get to 51 votes on a major change in tax policy like that? I think the answer is absolutely yes. I think that's conceivable. And so for a lot of business leaders across the country, one of the questions they might want to ask is which is going to be the administration that's more friendly to business? Well, we don't know where she stands on tariffs. We don't know where she stands on a lot of other questions. But on tax policy alone, the idea of not just raising tax rates, but raising tax rates and applying taxes on unrealized income, that is a catastrophe of epic proportion.
Now, before you discount Vivek, remember, Vivek, more than a year ago, forecasted, that the Democratic Party would not put forward Biden, but they would not let the Democratic voters choose a candidate. The Democratic machine would choose that candidate right before the convention. Secondly, the vice president that Kamala Harris has just chosen, not only did Vivek detail his tax policy, understand this is a man who is 60 years old, owns no stock, has no capital gains of his own, short-term, long-term, doesn't even own a home. So if you want to vote Orange Man bad, you best think about your own retirement plans, your children's futures for employment. Good luck, everyone.